Okay, so anyone paying attention to the markets these days knows things are, let's just say, interesting.
Interesting is one word for it.
Between the upcoming election and all the economic uncertainty, it's understandably got people on edge.
Yeah, I get it. Nobody likes feeling like they're just along for the ride, especially when the market feels more like a roller coaster.
Exactly. And that's what we're diving into today. Are there any signs out there that could point to where things might be headed? And more importantly, are there opportunities even in the middle of all this, well, this chaos?
Chaos can definitely breed opportunity, or at least that's what they say.
They say a lot of things.
True,
Yeah.
but in this case, there might be something to it. We're looking at some analysis from mapsignal.com, specifically the work of their lead analyst, Lucas Downey.
Okay, so this Downey guy, he's the one who's saying big gains could be on the horizon for the NASDAQ.
He is, and he's not just some random voice in the wilderness.
Yeah.
This guy's got serious Wall Street cred, spent years analyzing the moves of some of the biggest players in the game,
So he's seen it all.
pretty much. And what he's all about is this concept of money flow, which sounds kind of basic when you say it like that.
Right, like money goes in, money goes out.
Well, yeah, but it's more nuanced than that. It's about understanding the motivations and strategies of those who are moving massive amounts of money. The institutional investors, think pension funds, hedge funds, the really big fish.
Okay, I'm starting to see where you're going with this. So instead of trying to outsmart the entire market, we're saying maybe it's smarter to try to figure out where the smart money is already headed.
Exactly.
Yeah.
These are the whales of Wall Street. They make a move, it creates ripples that the rest of the market tends to follow. Think of it like a school of fish, where the big fish go.
The others usually follow. Got it.
Yeah.
So how do we track these financial whales? Where are they putting their money?
Well, that's where Map Signals comes in.
Hmm?
They have this thing called the Big Money Index, or BMI. It essentially measures the buying and selling activity of these institutional investors.
Right.
And what's interesting right now is that the BMI is showing healthy activity, but it's not in the red zone, which would indicate things are overheating, like we're due for a correction.
Okay, so there's definitely appetite, but not at a level that screams bubble.
Yeah, got it.
Well.
So we've got our finger on the pulse.
Yeah.
But where exactly is this pulse pointing? What are the actual signals that Downey's seeing?
Right. So he highlights two major events, both with some pretty compelling historical data to back them up. The first takes us back to August of this year, when the market took a bit of a nosedive.
How could I forget the VIX? That thing that measures market volatility, how jumpy everyone's feeling, shot up to 38.
38.
For context, anything above 30 is usually considered a sign of major fear and uncertainty. It felt like everyone was hitting the panic button all at once. Yeah, and they were. But here's where it gets interesting. During that sell-off, we saw a massive wave of what are called ETF liquidations. Basically, exchange-traded funds, or ETFs. Think of them like baskets of stocks that were being sold off at an alarming rate.
So investors were literally dumping their baskets of stocks like hot potatoes?
Precisely. On August 5th alone, 142 ETFs were liquidated, marking one of the largest single-day outflows in years. Now, this type of panic selling is never fun to be in the middle of.
I can imagine.
But Map Signals has been tracking these events for over a decade, and historically, they've often preceded some pretty impressive market rebounds, particularly for the NASDAQ.
You mean like a slingshot effect? The harder the fall, the higher the bounce?
That's the general idea. For example, after similar sell-offs since 2010, the NASDAQ has seen an average gain of 12.8%. Just 3 months later.
Okay, but 12%.
Bump that up to 12 months, and we're talking an average of 36.8%.
Okay, now we're talking.
And if you had held on for a full 2 years, the average historical return skyrockets to over 72%.
Okay, now those are some numbers that would make even the most risk-averse investor crack a smile. But here's the thing. This isn't ancient history we're talking about. That August sell-off was barely 2 months ago, and guess what?
What's that?
The NASDAQ is already up over 13%.
It's a promising start for sure.
Ah.
But let's not get ahead of ourselves. There's another piece to this puzzle. And that's where September's performance comes in.
September. The month of pumpkin spice and apparently potential stock market gains. Who knew? Tell me more.
Well, September 2024 turned out to be the NASDAQ's best September since 2013, closing out the month with a gain of 2.48%. And historically, a strong September tends to be a pretty good indicator of how the market will perform in the final quarter, October through December.
So we're talking about momentum carrying over like a strong finish to the year.
Exactly. Think of it this way. September often sets the tone for the last quarter. Since 1984, the NASDAQ has averaged a respectable 6.08% gain in Q4.
Okay, not too shabby.
Not bad at all. But, and this is where it gets really interesting, when September sees gains of 2% or higher as it did this year, The average Q4 performance jumps to a remarkable 9.1%.
Wow. Okay, so we've got these two separate signals, both rooted in historical data and both seemingly pointing towards a potentially strong finish to the year for the NASDAQ. I have to admit, this is pretty compelling stuff. But before we get too excited, let's take a step back. I know we can't predict the future, and past performance isn't a guarantee of future results.
Absolutely. It's crucial to remember that the market is a complex beast, influenced by countless factors we can't always predict. But what we can do is look for patterns, analyze historical data, and use that information to inform our understanding of potential opportunities and risks.
Exactly. We're not about giving you a crystal ball here, but rather equipping you with the knowledge and insights to make informed decisions. And what I'm hearing is that these two signals, the August ETF liquidation event and the strong September performance when combined with this whole follow the money philosophy, paint a pretty optimistic picture for the NASDAQ, at least for the near future.
It's definitely food for thought. And what makes this analysis particularly interesting is that it doesn't just stop at broad market predictions. It encourages us to zoom in further and explore specific sectors within the NASDAQ that might be especially well positioned to benefit from this potential upswing.
All right, now you're speaking my language. I was hoping we'd get into specifics. So we've got this potential NASDAQ growth on the horizon. But what does that actually mean for, say, someone like me who's interested in specific companies or sectors?
Well, that's where your own research and due diligence come in. Remember, the NASDAQ is home to a diverse range of companies, primarily within the tech sector. But within that sector, you have subsectors, like artificial intelligence, cloud computing, cybersecurity, and so on, each with its own unique growth drivers and potential.
So it's not just about blindly throwing money at anything with the NASDAQ label on it. We need to be a little more strategic, a little more targeted in our approach.
Exactly. For example, let's say you're particularly bullish on the growth of artificial intelligence. This broader analysis might lead you to dive deeper into specific AI companies listed on the NASDAQ, examining their financials, their market share, their competitive landscape, and so on.
Or perhaps you're intrigued by the continued expansion of cloud computing. This analysis might prompt you to research the performance of cloud infrastructure providers within the NASDAQ, looking for those poised for a strong finish to the year.
Precisely. By connecting these broader market signals with your own individual investment interests and risk tolerance, you can start to narrow down your focus, identifying those pockets of opportunity that align with your overall strategy.
So instead of getting caught up in the headlines, and riding that roller coaster of market sentiment, this analysis encourages us to be a little more like detectives, right?
I like that analogy.
We're looking for clues, patterns, historical data to help us make more informed decisions. And it's not about eliminating risk altogether because
Investing always involves risk.
Yeah. Exactly. But it's about understanding those risks and then, potentially finding those bright spots even in times of uncertainty.
Right, and I think that's what makes this kind of deep dive so valuable. It's
Yeah.
not about giving you a prepackaged investment strategy,
Yeah.
right? It's about giving you the knowledge and the tools to approach your own research with a more informed and discerning eye.
I love that. We've gone from market jitters to a potential game plan, all thanks to a little follow the money wisdom and some fascinating historical data.
It's all about connecting the dots.
Yeah.
And, maybe this has sparked some of your own what-if questions, some avenues for further exploration as you navigate the markets in the months ahead.
It definitely has for me. I'm already thinking about those specific sectors we talked about, AI, cloud computing, maybe even some of the companies developing the metaverse. Who knows what the future holds, right?
That's the exciting part. The beauty of the market is that it's always evolving, always presenting new opportunities for those who are willing to do their homework.
And that, my friends, is what the deep dive is all about. We'll provide the maps, the compass, the tools, but the adventure of discovery, that's all yours.
Happy exploring.
Until next time.